Macroeconomics.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. It is Friday, TGIF. Not a hell of a lot of people here. But I do see, actually, you know what I see is I see regulars on this site that are just stalwarts. I'm so proud of them. Hey, there's Coinigy's watching our show today, but I'm not saying anything stupid, eh? Jeez, anyway, got regulars hanging out in the video with us here, the video room, and actually, what's super cool today, being Friday, of course, we have special guests on usually on Friday. And we have, what's your number on the site? 1075 or something like that? Actually, I've got to get the story behind why he calls himself that. But we have Effie on the call here today, being Friday. And super excited about that. You want to say hello to these good people, Effie? I don't know if you feel like it or not.
Sure. Hello, everyone.
There you go. Didn't catch him with his pants down. No.
Yeah.
So we should have a lot of fun in the after party, talking charts and talking markets with site veterans. And of course, Friday's always a fun sort of free for all day. You never know where the hell the conversation is going to go. But let's take a look at the broader market and maybe give you just a quick update on what the old man's seeing here today. And Econs, those kind of things, and maybe, a quick boo at good old Bitcoin and crypto, and a word or two about what we should expect through the weekend. So without further ado, I am in a stock market short, selling the euro close, but this stock market looks extremely strong today. So just sort of an update. You might hear the little stop bells and stuff go off, but had a really interesting 4-hour level come in here. I don't know whether we're at this megaphone. This megaphone has been sort of eluding me in the stock market. I did have it drawn off of these highs previously, and some people on social media were kind of like, I don't know, Brian, that's a bit sketchy. And frankly speaking, I think they were right. So the textbook was supposed to be off of that high and that high. So it is interesting. Oh, lo and behold, look where we are here right now. And I did have an ATR level, and I did have a Foggenbaum level here. So this actually, and also too, this was a 4-hour AB equals CD level. But you can see the market it heading into the euro close. I mean, very, very strong market today. I don't know whether fighting this trend here in the short term is such a good idea. 3-minute there, you can see there is the bear. I always, when I come into levels, I always want to see bearish divergence and momentum, which we got into that euro close. And then I want to see Willie nice and stupid. And you can see we got RSI bear divs here. So I think on balance, the trade was justified. You can see I'm not taking a hell of a lot of risk on the trade up at these 127s. And as I said, this was a higher time frame Foggenbaum level. And if anything, what a great analogy of a trader's life. I have no idea what's going to happen here. Levels are levels. Actually, it was kind of cool to see Chris join me in on this short up top here. Hey, you just don't know what the hell is going to happen. It is a trader's life. So why would I? So on top of the fact that I'm obsessive about 4-hour levels, and of course, if this M top comes in here and we break down and the moving averages cross, then I'm laughing. Don't even need to stress about it. As you can see, as we were getting ready for the video, this is probably half the reason why we started a little bit late. Was Brian was like, oh, what's gonna happen? What's gonna happen? But hey, live by the sword, die by the sword. I don't know what's gonna happen. But consider risking $7.50 to make 150, 120 bucks. Actually, I should probably, while we're at it, move this take profit level. Really, my strategy here is I just want to take profits at the VWAP. But anyway, point being that not a bad looking little day trade heading into this liquidity event, the euro close. Is pretty typical. And I guess the question is, why would you be thinking short up top there? Like I said, 4 hour charts. I think we had a half decent level to take a shot at there. There's some interesting anecdotal evidence. Then also too, if we pop on over to the stock market, and if you've been watching these Friday videos, and if you follow my Twitter feed and stuff like this, I continually point out the absolute robbery that's going on in the stock market these days. I mean, to be perfectly honest with you, this is borderline criminal what they're doing. Because week in, week out, we see this 80 to 90, well, probably 90 to 95% of all puts are written by institutional players, Goldman Sachs's, Joey Diamonds, all those people. And you can see based on the open interest, these are the actual number of contracts that are written. I mean, this is crazy. If they can take the market out above 422 here, look at this open interest. Like all of these contracts here are put options, which means they make money if the market is below these prices into expiry. And look at what happens here above 422. I mean, there's nothing here, absolutely nothing. I mean, that's startling how blatantly, brutally blatant that is. So once again, and like literally over the past 3 or 4 months, it's been like every single Friday, you could literally set your watch to this. So that number there is 422. That's right there. So really everything above here, this is just all fluff. It's just really a question of how juiced is the public. Do they want to take this market out up top? They might. I have no idea what's going to happen to this trade setup. But if I'm going to take a short shot, they ran the Europeans out right up at the highs. So anybody that was short, they basically got screwed right into their close. And now we're into a funny little vacuum window here where technically the weekly options expiry, it used to be that they would expire at 11 a.m., which means that there's about from 8:30 my time, Pacific time, to 11, there's about a 2.5 hour window that they can kind of monkey around, bring the price back if they want to a little bit before that actual expiry. So that's hence the reason why I took the shot on the euro close. These used to be actually one of my bread and butter setups that I used to trade when I was at prop firm. Geez, that's a decade ago. I used to love trading this trade every Friday. Anyway, so that's sort of the context of what I think is going on, sort of where we are right at the moment. Now, why is the market so darn uber bullish? And if anything, this is an interesting conversation right now because and probably the best to like I said, want to be the demonstrator of best practices. You probably heard me talk lots about that. So, I just running this spreadsheet. What does a day trader's life look like? All the different setups, all the different trading plans that I run. And so, might as well start at the beginning. Today's Friday. Relatively good computer equipment. I haven't seen too many fails of late, so that's kind of good. Diet's okay. Exercise, I actually pulled a muscle exercising the other day, so now I'm kind of did do the push-ups today though, did do the squats, and unfortunately couldn't do the sit-ups and the squatting because that muscle that I pulled. I hope it's not a hernia, but anyway. Went to bed at 9:30 p.m. last night because I was just so behind on my sleep schedule. So I was actually up bright and early this morning. The irony of it all, though, is the opening range trade in crude turned out to be a scratch trade, but I went and got my coffee like 5 minutes before the opening range came back, and the boys were like, where the hell were you? You missed the damn trade. Turns out it was a scratch trade, so didn't miss too much there. But anyway, that's kind of a funny anecdote of a trader's life. So we had a big econ report out here first thing this morning. So what's driving price? The jobs numbers for, I guess, the end of May, beginning of June. I think this is the May report. Came in very, very strong. Interestingly enough, though, the unemployment rate actually ticked up from 3.4 to 3.7. So how the heck does that work? Had a ton more jobs created, but the unemployment rate ticked up. It just goes to show that these statistical models that these guys run, a little bit sketchy. I think the whole point here is that there were a number of people that fell out of this sort of labor pool that have actually come back into the labor pool saying that they are working for jobs. And so that's why you had your actually unemployment rate go up, because more people are actually like, hey, maybe I can get a job now. It's a tough one. I would simply say that this doesn't bode well for Fed meetings in about a week or so. And I could say unequivocally, if the stock market is absolutely booming higher here, I can't see how that bodes well for our interest rate meetings either. What worries me here now is we're probably going to have one of these sort of buy the rumor, and then the Fed announcement happens and it's sell the news. And also, too, just keep in mind with these megaphone patterns, sometimes and actually you saw this on Bitcoin. It was actually a really good working example. Sometimes these megaphones, you'll go up and then you'll carve out like a big head and shoulders top, and then we'll fail like over here. And then you look back in hindsight and this thing comes cranking down all the way down, back down to reasonable levels. So don't be surprised if there's some monkey business around this megaphone top level. You never know in this crazy game. But my hunch here is that this, just the simple fact that the stock market is booming the ways that it is, I'm sure the Fed's going to look at this and say, well, how can we stop raising interest rates? If we actually say, you know what, we're done raising interest rates, go have some fun in the market, this stock market's going to go crazy. And I don't think that's in the end, that's going to be inflationary. People are going to feel richer. They're going to go out and spend a whole bunch of money on frivolous goods and services, and the inflation data is going to go crazy. So I don't know. This is another one of these things where this is it, and other than the fact that we have this options expiry event happening here today, and I do believe that a lot of what you see going on in the stock market is everything to do with this options expiry and has very little to do with the actual economy. If this wasn't an options expiry event day, I would actually say, you know what, this probably is one of these scenarios. What's good for Main Street probably isn't very good for Wall Street. Anyway, we'll see what happens. One thing I did notice out of this data, and I think the key here, if we actually go look at the data itself, is, everybody's worried about average hourly earnings. Now, if you have more people working and you have more jobs, then that means pretty strong economy. But usually if there's more people working and more people demanding, higher wages because the labor pool is really tight and all that kind of talk, then that's inflationary, right? And the workers are going to demand higher wages, and you got to pay the workers more to get a guy to actually come in off his ass and actually work. But you can see in the data, average hourly earnings month over month actually ticked down. Average hourly earnings year over year ticked down. So the Fed's going to like that, most definitely, right? Because they always say about 2/3 of the cost of running a business is employment. And I mean, hell, at TRI, we're going through that right now. Through that last expansionary cycle, we added a few more people to the crew. And right now we're kind of like, oh, Jesus, if crypto is as weak as it is, are we going to be able to keep these people on? I would love to be able to keep everybody on. And I would, I'll go out of my way to try and find you work to make sure you stay with us. But at the same time, too, you got to understand that we're going through exactly the same pains that Chair Powell has talked to everybody about in our economy. He wants us to feel a bit of pain. Now, like I said, the good part about it here is that because the labor pool ticked up there, and more, it looks like more people are coming in willing to work, but actually take lower pay for the work. So that is really interesting if we go to the market and we ask, what the hell's going on with gold right now? Because gold, of course, is your inflation proxy, right? I think that's how this is supposed to work. So gold did not like that report at all. And silver, did not like that report at all. Interestingly enough, who did like this report? Look at this US dollar coming screaming back here. Because frankly speaking, the US economy is strong, but the inflationary pressures are abating. So fascinating to see. I don't know whether this is enough to cause the Fed to calm down. You know, we do like to watch the short-term interest rate market very closely. And we've been talking to you guys recently about how it looks like the market was getting a little bit worried that the Fed, the Fed, how do I do this? I think you keep changing things. I think it's this button now. Hey, there we go. Fed was kind of losing control of the situation to a certain degree. This Fed spread, if this Fed spread is above 100, you're going to have SVBs happen. You're going to have, what was the other big regional bank that blew up there? I can't remember what the hell the name of it was. Anyway, so, you know, I've told you guys repeatedly, this used to be the favorite measure years and years and years ago to sort of keep an eye on what the health of the financial system. And if this thing gets above 1.0, then it means, oh boy, we got trouble. Thank you, sir. Cotter says First Republic. So, you know, if you saw this spread above 100, you have to be asking, and this is what Druckenmiller's been asking for quite a while now, where are the dead bodies? Are there more dead bodies floating out there? And he thinks there are. And frankly speaking, you want to see something that absolutely shocked the hell out of me? What was that? Oh, that's my chair. My chair's about to break here. So, but check this out. I couldn't believe this, and I wanted to kind of do this as a quiz for social media and stuff. I don't know whether this is going to work or not. Everybody, close your eyes while I pull this up. I don't think you can, but anyway. Oh, what the hell is all this? Oh, I know. That's the wrong symbol. There we go. Look at this number here. I couldn't believe this when I saw this the other day. Goldman sucks. These guys own the U.S. government. So I suppose if they get into trouble, the U.S. government's just going to mysteriously all of a sudden, oh, everybody gets a bailout. Oh, am I going to get flushed out of my short here? Well, Jesus, look at this stock market. So damn strong. Anyway, look at this debt to equity ratio. And of course, in recent videos on the site and stuff, I've been barking about debt to equity and the Canadian banks and why I think Canada's a short and all that kind of stuff. But when I saw that number out of Goldman Sachs the other day, I went, wow, that's incredible. So I don't know what's going on there. But as Mr. Druckenmiller said, there are dead bodies floating out there. And the question is, where are they? Who are they? So anyway, the point that I wanted to make about this is you can see the Fed funds are actually ticking higher here. And the euro dollar market actually is coming back a little bit. So that spread is coming in. We should all go, okay, doesn't look like we're heading back into crisis mode just yet. But it is interesting to see how the Fed funds are ticking higher. So it's almost like the market is, you know, the Fed funds, of course, are trading on expectations of what the Fed's going to do. And I think that the market likes the idea that the Fed isn't quite done here. Close, but not quite. And of course, our sine wave of what the money cycle should look like, we are finally starting to come into our pivot here. Usually it's a bit delayed. Like in this past case, it took about a year or so for them to finally get their act together. And you remember when Donald Trump, he was even going on and on about, hey, why are short-term interest rates so damn high? They should be a lot lower, right? And you remember he had a big meeting with Powell at the White House and all that bullshit. Well, because his people probably saw this same study. So, but the point here is we're finally getting to this damn sine wave pivot. And hopefully, you know, as soon as the market believes that short-term interest rates have peaked and they're going to start to fall, you know, Bitcoin's going to start to rally, or stock market's going to start to rally. Oh boy, here we go. Next growth cycle. So as it is, interesting to see US dollar cranking higher, international currencies all coming off. US economy still perceived fairly strong. I was a little surprised, to be honest with you, this morning to see the way the Bitcoin and more importantly, the way Litecoin really broke here. So I suppose, what time is it here? Yeah, we got about 5 minutes left. We'll finish off just a quick boo at the corn. I think as I've told you recently, I can't get bullish of this thing until we actually start Wing out on the other side of this trend line. Really, really good lesson in technical analysis for all of you aspiring traders. This breakout through that trend line there, that's often a trap. Of course, the public sees that and they go, oh, it's a new bull market, away we go. And then you can see 3-bar fractal, and we puked out and actually made a new low here on this daily candle here. So what scares me now is I think that we are, I don't know what color this is going to be. Let's see. Yep, still blue. I think we are walking down the trend line, if that's possible. I don't know. I suppose if this stock market goes into orgy mode, it will drag Bitcoin up with it. And as I said before, I've been kind of thinking this for the past little while, that here is the FOMC event. I actually like the idea. We've seen this repeatedly. Market likes to rally into that FOMC event. Then following the FOMC event, be careful. So actually of late, most of the times Bitcoin hasn't absolutely puked out following FOMCs. It's just been sort of like probably buy the rumor, then just go sideways and clean yourself up a bit. So this has been my expectation over the past, I don't know, month or so, that we were going to work our way up into this event and then roll over following the FOMC event. And I do believe that they're going to raise interest rates again, but we'll see. Cross that bridge when we come to it. So this short is still technically working. It is in the money, but I wouldn't be surprised if we do work our way up top here. And this would not, if we went like A to B, C to D, that would not be a W on the other side of the trend line, because part of it would be on this side. And that scares me because I do think that that's what's going to happen. But like I said, once we hit that event, then we roll over. So, this isn't a bad place. Julian was actually on the call yesterday, and he was talking about his model. Actually was saying that this isn't a bad place from his RSI perspective to take a shot off of like this trend line break there, and try and clip that move up and maybe a test of this downtrend line. You can kind of see right now. And I think this is what, especially when we head into the weekend, you can see Bitcoin's got a little bit of room to actually enjoy a bit of a rally here. So, we know that FOMC doesn't happen until 13th, 14th. Could we get a little bit of a pop-up here through this coming week and then set up some sort of topping event into next weekend? Actually, I don't think that's unrealistic. Then we go over and we look at some of the short coins and we ask, well, what do we see? Do we see higher highs and higher lows? Is this kind of an environment you want to play in? How about Eddie's favorite coin? Look at that damn thing go. What the hell? There's always a bull somewhere. This is meme coin heaven right now, right? In fact, Julian is trying to participate in a meme coin, what are these airdrop ICO things? Here we go again. So, if these things are breaking to new highs, then I don't think it's a good idea to fight it. A couple names that I really like recently, I actually publicly talked to you guys about. There's a nice little front running of the bot trade setup that fired on this ocean the other day. So that thing is just looking great here. And you can just go through the list one after another. Some of these just look absolutely incredible. This is one, it hasn't fired yet, but of course I'm watching like a hawk, whether that W comes in on that guy. This was a name that Eddie actually gave to me recently and said, this down into attractive buying area. So I went and picked up some of that. That guy looks nice and sexy. Look at this little guy here. Tell me that thing isn't about ready to run. And of course, we're heading into the weekend. Stonks are happy. Looks like Bitcoin's not going to puke out here. We're just sort of, riding along this trend line. Probably going to see a nice little counter trend rally. This is the Bitcoin chart. I think we have another one here. Yeah, this is the one I was talking about. As long as we just don't puke out here, we could actually enjoy a little bit of a rally. And as I showed you with that RSI study on Bitcoin, there's a bit of room for her to run here. We got a playground here. So, you see a name that looks like that. Is that not a W? W's are W's are W's. So it's not really like I'm going to get into the business of predicting what's going to happen here. But if I see a W like this, and I don't know if it's on any half decent momentum, you can see we actually have like higher highs and higher lows. Willie's trying to turn up here. whole thing. It'd be interesting to see. Oh boy, look at those RSIs. What if I told you guys about two W's on RSIs, and if the second W comes in through the 50 line? Oh boy, look at that. I mean, so get out there and have some fun. And if anything, it should be a really great conversation with Effie here today in the after party, because I'd be curious to see what he sees in the market. And other than that, I think that's probably my report for you guys here today. All right, I think I'll leave it at that. PMA for the win. I don't know whether I'm going to get stopped on this little short or not. I might have already, but I'm going to go check that out. Wow, interesting to see how the bond market sure didn't like that employment report, eh? So, put this together, just those two images together. I can't see how the Fed is done. But at the same time, too, could we have one of these sort of buy the rumor, and then on the Fed event, it becomes sell the news, and then we tank into the latter part of June, into the end of the quarter? I could definitely see that kind of scenario. So we got about a week or so into that Fed meeting. Over the next week, looks like things are still pointing up. All right, have yourselves a great day. PMA for the win. Slow and steady wins the race. Don't take no wooden nickels. Remember what your number one job is, and let's go have fun listening to Effie and what he sees happening in the market. Other than that, I guess I'll see you all on Sunday. Have yourselves a great day. PMA for the win. All the best, and bye for now.